would never actually thought that this year the subscriber in Variable Traders channel in YouTube become over 100,000, and it didn't.
It's their time frame, not investors' time frame.
Yeah, well, that's true. I mean, so, we're in an age where we want it now. And I'm handing out my money.
Here, hopefully, I can get Andrew on board a little bit more.
Right? I mean,
Anyone?
What happens to these $700,000 lost on my account? Everyone's gonna see that.
Yeah.
So.
Hello, Variable Traders. Hello, YouTube, wherever you are. Welcome back to another episode of After Hours with Traders. I got a little bit of sad news. Today's going to be the last episode we're going to do from season 1 of After Hours with Traders. So season 2, we're probably going to start it in a couple of weeks after Brian and Andrew are both back from vacation, and we're going to have a new format, maybe a more intimate. Maybe we'll sitting down, having a cup of coffee, maybe a drink, who knows, maybe a cigar, and we're going to talk market in a different way. But this is the last episode, and of course, with the first person we started this show, Brian.
There you go.
Welcome.
Hello. Good to be here, and I guess this is the last of, and then we'll have a new beginning whenever we gets back. So, yeah, looking forward to doing something new and different.
Yeah, exactly. Season 1 was, I would say season 1 was a huge success. A lot of people tuned in. We tried a lot of different stuff. We looked at TikTok videos, and it was great. I can't wait for season 2. I have to start really thinking. But I can't help but notice, Brian, you look good. I love the jacket. What's going on?
Hey, well, it's the last of our season 1. Got to dress up, and you guys keep upping your game with your suit jackets. So hey, here I am. Got my custom made jacket on and ready to go, ready to roll.
Yeah, looking great. Remember to hook me up with your suit person.
Got it.
Because you get your stuff custom made.
Yeah.
I would love to. It was a crazy day today in the market. Crazy past 2 days. So I would love to start the show with this video. Brian, this is a strategist at BMO, and just see what he's saying about the market today. Let me go to the video. Just the first 30 seconds.
From BMO. So you said that stocks were going to rally on Wednesday, the last time you were on, and you were obviously right, but I don't recall you telling me that they were going to plunge then on Thursday.
Well, the stock market is the world's most humbling instrument, Scott, and assets are obviously, the broken clock is right twice a day. The bulls were right yesterday, and the bears were right today.
So I really like that start. Stock market is the biggest humbling instrument.
Yeah.
It was insane. Let's start from yesterday, Brian.
Yeah.
What happened? What Fed said? Why market reacted like that vertically? And what happened today?
Well, everybody kind of knows that as soon as Powell got asked the 0.75% hike question, and he said it wasn't on the table, I think that it was weighing so much on people's minds and investors' minds and traders' minds, and I'm sure it was programmed into the machines too. So as soon as he said it's off the table, which I don't think it's entirely off the table, as soon as he said those words, I mean, the market just took off, and then the machines, really, got things going, I think, and then it was just off to the races, and you had that massive rally because there was so much pent-up concern, if you want to call it that, right? But as I've been saying there was a saying in the room this morning, you can't trust these, in this market environment, you can't trust those rallies, and we saw exactly why you can't put too much faith in that kind of a sort of a, impulsive move, let's just say.
Yeah, I mean, it was excessive to the upside. Like, there's no way around it. It was definitely excessive to the upside. And today, it seemed a little excessive to the downside as well. I know Andrew tried to catch a reversal. He had a major loss, a big loss. So he wasn't pretty in the office today. Yeah.
Well, and I sort of jumped onto that sort of catching the bottom train too. But I think the difference was when I was looking for double bottoms or consolidations and then possibly reversals, and every time it failed, I got stopped out, and that sort of ate away a bit at the gains I'd had at the open with Wayfair and a few good trades with AMD. But unfortunately, if you're in an environment like this, you've really got to honor your stops. because if you don't, you're just going to keep adding to a losing position in a market that just keeps going down, right? That didn't seem to want to find a bottom till almost noon.
No, 100%.
Yeah.
Yeah, absolutely. I mean, if you look at the trading terminal right now, if you look at my screen really quickly, it was kind of an all-day sell, and we got a little bit of rally. I would say this is probably short covering. The people that were shorting all day, they covered into the close. I mean, the million-dollar question is, what's going to happen tomorrow? You think we're going to see another rally, or?
Well, I think we've had this, impulsive move to the upside. We've had this sell-off, which I think was in part predicated by we talked about this before the market open, or for the start of the session here, about how the bonds really sold off, and a little bit of a surprise there. I think it took everybody by surprise, which I think caused a lot of this selling, was this the spike in yields again, which went back up. So tomorrow, I mean, we're going to get an employment number, some employment numbers.
Yeah.
They're going to be somewhat telling in terms of what's going on with the job market, and that might have some impact. But I think when you have one big up day like this and another big down day like the one we had today, I think there's probably just going to be some churning up and down going into Friday.
Yeah.
So.
Yeah, it's definitely, it's very hard to get the direction of the market. So as an example myself, after the Fed said, 75 basis point is off the table, I said, okay, the selling in the bond has been overdone. We're probably going to see yields coming down because the Fed's not going to be as aggressive. So I bought some 10-year, and it was definitely a brutal day for me. It gapped down. I was so surprised when I got behind my desk. I'm like, this doesn't make any sense. But this is where, really risk management, understanding, where to stop, understanding your risk appetite, looking at your portfolio as a whole, make sure you got enough shorts and longs really come into play. I know you are similar to me. You love selling puts.
Mm-hmm.
I sold some Tesla puts when Tesla was down at about like 3%. I think it lost S3, and I sold some puts. I said it was going to recover. This is pretty extreme. And it kept selling. So I was able to sell, go short Tesla just to hedge my selling puts. So, really knowing these hedging dynamics and things of that nature, I end up coming out of that trade with like $500 loss instead of like $20,000 loss, right? So really, really important.
Yeah, and I think in this market, I think it's managing your capital and not blowing up your account, really. Yeah. If you're interested in taking trades, if you still want to be involved in the market, manage your risk, the money you're risking, keep it small. So, I've got a couple of puts and call trades on right now. As people know, I'm short the puts on Facebook, 200 puts. It was looking great yesterday when we went out at 200, but then I had shorted some Starbucks calls at 80, and they weren't looking that great, and now they're down at around 78, 77 bucks, so they're looking better. And Facebook managed to stay above 200 today. So, but now I've pared back those positions, and I'm sitting on the rest of them, and we'll see tomorrow. I'm just hoping that the market kind of sort of settles out and we don't make much of a move one direction or another.
Yeah, definitely.
The other trade I did today was I was watching the natural gas. Natural gas has just actually been on fire, and of course it's a lot of that's been driven by this whole Russia-Ukraine situation. So yeah, natural gas has just been going through the roof. So we had an inventory report that came out today. I kind of watched that. It spiked up because obviously the inventory probably built a little bit, but I think sort of the reality of the situation with the natural gas being so strong, that initial pop or initial drop on natural gas got bought right back up. So I jumped in when it started to go back up again. So
it was a great buying opportunity. Traders watched it and jumped on it. Yeah. So
that was one good opportunity. But again, keeping a stop at when the bottom. When it bottomed out, getting in and then keeping a stop in case it did actually continue to sell off, because it's been saying for a while it's really extended, but it doesn't seem to want to slow down yet. So
yeah, definitely.
Yeah.
There are some rumors, since we're talking about the war and natural gas, that Russia is thinking about, I've been reading on over the news that they're thinking about finishing the war within the next week or so. It's definitely rumors. I don't know. We definitely hope so. I mean, not only just because we want market to go up and all that stuff, but definitely war is never a good thing. And our thoughts and prayers are with people who are being impacted.
Yeah.
Wow.
I hope that's true. I think, for this to end, Putin has to come out looking like a winner somehow.
Yeah.
I don't know how that actually happens, but anyway, we'll hope that is true and that actually happens. So
yeah, definitely. There are rumors that he has cancer and he had to step up because of the surgery. You just hear so many contradicting things that I'm not even paying attention anymore. Yeah. It's very very brutal. Let's spend a few minutes because we got you kind of our swing trading macro expert, unpack what happened at the Fed's meeting. So I thought it's quite bullish because they're meeting 3 times. I think they met now. They're going to meet in June and July. Then they're not meeting all the way till September. Right. So I thought maybe that's kind of a good news because they assured us all the 3 next rate hikes is going to be 50 basis points.
Right.
And then they're going to monitor inflation. A lot of people believe inflation has already peaked. So if inflation start coming down, then maybe the September rate hike is going to be at 25 bips rather than a 50. And that could be good for the market, right? Rates really slowing down. But again, it was very surprising to see today, things like today. There are some speculation of what happened today. I want to play you a video and then get your opinion on this as well. Let's go ahead.
Of what is happening and why the selling was so severe today. Forced selling, no doubt, right? Margin debt is at extraordinarily high levels.
Options, market gamma, there's some stuff happening.
People are being forced to get out of some positions that they otherwise might not. That could be a role. I'm told by somebody earlier today, within the last hour or so, that a lot of the selling today was primarily driven by $12 to $15 billion in levered ETF flows, right? Those products where you like triple levered, right? And then when rates shoot up like they did today, and I'm also told that it was primarily related to NASDAQ, right? These triple levered ETFs, the Qs, the TQQQ, you take advantage of it to your advantage on the way up. But when rates shoot up, the environment changes, it's a sell and get out of risk.
Do you buy this? Do you think this was a liquidation today?
I don't know. You didn't, once sort of we had a bunch of selling in the morning, it didn't, you look at those charts there, really, the selling was more muted. I don't know if it was really panic selling, if you want to call it that, and forced selling. It just seemed like, again, it was another situation where there just weren't any buyers, and there were a few sellers, and when you have more sellers and buyers, the market goes down. Again, I think when you look at the overall direction after that first sort of hour and a half, 2 hours, it really started just becoming sort of more of a muted sell. I didn't see how the VIX went out. I don't think it spiked up extremely high.
No.
So there wasn't a lot of panic in terms of looking for options to cover positions. It's interesting you mentioned TQQQ because one of our traders is one of our members in the room has emailed me showing me some articles that are coming out about how FINRA is starting to look at these levered ETFs like the TQQ and trying to decide if they need to have more rules around who can trade them and what kind of information brokers need to provide traders and investors, because the theory is maybe they just don't, these people that are using these products don't really understand them and don't understand how while they can really benefit you, they can really destroy your account at the same time. The knife cuts both ways.
Yeah, definitely. I mean, they're amazing on a way up, but the math actually works against you on the way down, right? So, because if you drop by 50%, to get to break even, you got to go up by 100%.
Exactly.
So the math is just against you.
Yeah, yeah, especially when they're dropping. You know, like you said, that the math is not on your side. And then, you know, if you're holding for a long period of time, these things are constantly rebalancing, and when they rebalance, they tend to the value tends to just erode in the rebalance. So, yeah, they're like I said, I think FINRA is in the process of getting comments, and I think that ends May 9th, and who knows if they're going to do anything or what they're going to do. But you know, after this comment period, we'll see what happens next.
Yeah, it'll be interesting. But I tend to agree with you, Brian. Today didn't seem like a liquidation day to me. You know, the volume wasn't crazy. The candlesticks weren't like, it was a very consistent all-day sell. Just as you said, looking like there's more sellers than buyers.
Yeah.
Yeah.
And it was kind of interesting the way we went out the day, because I was on with Peter and Jared was on for a little while, and who else? You were on. Yeah, you were on.
Too,
yeah. So we did get a bit of a rally in the close. I kind of thought initially we had a short covering rally around the last half hour, and it kind of pulled back, but then it bounced up again. So I kind of thought that felt like more than a short covering rally at the end of the day. So maybe a few people just doing a little bargaining hunting at the end of the day. So it wasn't a terrible close. We didn't go out right at the low of the day, which if you want to find a silver cloud, so, you know, a silver lining on the cloud, that would probably be it, is that we didn't go out on, you know, the absolute low of the day.
Yeah. I mean, I know we don't say a lot of the F word, the fundamentals, but I can't help but notice it was Warren Buffett's annual meeting last Sunday, and he's bought almost 50 billion. So, you know, one of his criticism was he had so much cash during the 2020 crash and he didn't use it. Well, last quarter alone, he used almost 50 billion, and he's been a net buyer of Apple, Chevron, Oxy, you know, some names. So definitely, like, a value investor like Buffett is finding these little jewels, and he thinks probably this is a good place to enter.
Could be, yeah.
Yeah, but it's tough to say.
It's hard to say. I mean, you've got a lot of things that are really unknown. You know, have we, like you mentioned, have we reached peak inflation? Possibly. I mean, it does seem like maybe demand is starting to drop off. We talked about the real estate market. We talked about how lumber's coming off in price. So, you know, maybe we're getting to a point where inflation is starting to make people reassess what they want to spend money on, whether, you know, the argument has been that a lot of people have money in their accounts left from this COVID experience, and they've got all this money to spend. Now they're spending it all, and now they're looking at, now I've got to sort of budget myself. So maybe with the high prices, we get some demand destruction, we get inflation coming down a bit. The unfortunate thing is, you know, some of the underlying things like food and fuel are being driven by things that aren't necessarily demand related. They're, you know, driven by the war, and so so that's out of the Fed's control to a certain degree. But anyway, so it's going to be interesting in the next couple months. Like you said, we got a few more rate hikes, and by the looks of it, and then there'll be a whole lot of sort of information before September's meeting. For them to make a decision.
A lot of information. You know, one of the things, Brian, I hate about being in the financial market and working in financial market is you usually 6-7 months ahead of the ordinary people that are, you know, working different jobs. Like when I talk to my friends, they all got good jobs and their income is really high, but I'm like worried about recession and the yield curve inverting. They don't understand it. They're gonna understand it in 6 months when their housing prices will go down. It's like a gift and a curse, you know. Nobody really understands it. It sounds crazy, but you're kind of seeing into the future.
Yeah, and being in that situation, sometimes you overthink things too, you know, and that's you know, that can be a bit of a curse too, rather than, you know, just backing up and looking at the big picture of things, because, you know, there will be bargains to be had. There's no question. Where the bottom is, we don't know. So, you know, when you're a person like Buffett, when you think valuations are getting good, you just step in and buy, and you know you're probably not buying at the bottom, right? But in the long term, you're going to come out ahead. So
and that's exactly what he said. He said, I can't really time the market. Actually, as a matter of fact, I've been terrible at timing the market. All I can say is these businesses are really attractive at this moment, so I want to buy them. You mentioned something about Fed, and some of it is not Fed's fault. It's a little controversial. I mean, the popular thing to do is blaming Fed. I want to show you again from that same video, 1 minute clip where what's his name, Brian Belsky, he's a strategist at BMO, is kind of defending Fed and saying, with the bond market selling off today, basically the bond market, excuse my language, is saying a huge F you to Fed. They're like saying, hey Fed, you have no idea what you're talking about. The rates are going to continue to go up. And I thought this exchange was really, really interesting. So I really want to get your opinion on this. Let me bring it to the mark.
Off in inflation, which other Fed members are actually saying. And so the bond market's telling you that the Fed is wrong. And don't fight the Fed. And I think the bond market's actually being disrespectful to the Fed. The Fed's the smartest person in the room.
Disrespectful?
I'm going to stick with the Fed.
Disrespectful?
Yeah.
How are they the smartest people in the room? I mean, inflation was screaming in their face, and they ignored it.
Well,
how are they the smartest people in the room?
Well, I don't agree. They're the smartest people in the room because think about what they did in March of 2020 for this country and for the rest of the world in terms of the liquidity, Scott.
They did what anybody would have done.
Number two, no, we didn't do it before in 2008. We made mistakes in 2000. We made mistakes in 1994. We made mistakes
from
in 2018.
those mistakes, right? They're smart enough to have learned from the mistakes. But they did what anybody would have done.
The bond market is not. The bond market is misjudging the Fed. The bond market is. I think the bond market's ahead of his skis here. I really do. And if you listen to other very smart fixed income investors, they're telling you that the fixed income market is massively oversold, Scott. And
so are we? Is fixed income oversold, and are we misjudging the Fed a little bit? Are they the smartest people in the room, as Brian said?
Yeah, well, I think with a lot of these commentators that come on, and especially the ones that are critical of the Fed, I think it's a whole lot of looking in the rearview mirror, and it's so easy to criticize based on what's already happened. What's already happened. I think to a certain extent the Fed obviously didn't see the war coming at all. That wasn't part of the equation, and it's hard to say. Yeah. Is the bond market right and the Fed wrong? I don't know. I guess time will tell.
Time will tell.
It's really you can argue it. You can argue it both ways. I think you definitely could argue that the Fed was a little bit behind in starting to address the inflation that was obviously going up, and they were still expanding their balance sheet, and you kind of kept wondering why are they, everything's really strong. Why is the balance sheet keeping expanding it? So yeah, I mean, in retrospect, yes, you could say that they probably, if anything, they were a little bit slow in addressing this issue.
Yeah. I mean, hindsight is always 20/20, but it was so surprising to me that they were still buying mortgage-backed securities at like 6-7 months after the pandemic, when housing market had completely rebounded.
Yeah, it was surprising.
It was bizarre.
Yeah.
Yeah. Well, today, massacre. I mean, the kind of your safe haven sectors stayed a little better, but overall everything was negative. Utility down 1%, staples down about 2%, and consumer discretionary got absolutely bodied, down 5.6%. And this is the biggest holding here is Tesla, so that really had something to say. Let's go ahead to our calendar really quickly. Look at some of the earnings. Of course, Shopify down 20%. Now it's below pandemic. What earning this season, this week, surprised you the most, Brian?
I mean, they've all been somewhat surprising because, as we've been saying, as I always say, I don't like trading into earnings, and this season particularly has been completely unpredictable. You can have stocks that have been disappointed and they're up after hours, and then you have stocks that are, they're beat, but they give poor guidance, and of course then they get slammed. So it's just really hard to. I was a little bit surprised that Starbucks, gave a lot of bad information, and they gapped up. So that was, I guess, if there was a surprise there, that was probably one that I can think of off the top of my head.
Yeah, I mean, Starbucks been like so beaten down.
Yeah,
It's crazy.
That's true.
AMD had really strong numbers,
Yeah.
but stock didn't really do anything. Shopify, I didn't get the chance to actually read what happened, but stock gap down 20%.
Yeah,
was,
it really got hit, and you know, and Wayfair, of course, you know, that was the one I day traded this
Yeah.
morning. It got hit. I mean, Etsy was another one that got hit. You know.
You're telling me people don't shop at Etsy?
Yeah, yeah. Well, it's
Surprising.
yeah. Well, I think it's yeah. I know there was a bunch of statistics I heard. I won't go into them, but it was kind of interesting. They do have a fairly significant male presence. People,
really?
you know, maybe. I don't know, maybe it's you buying those macrame tea cozies, but I,
I have no idea.
yeah. So, but anyway, but Crocs was an interesting one. We were joking about that this morning.
Yeah.
Crocs was, you know, I had reported everything was great. It gapped up in the morning, and of course it suffered the same fate that every other stock in the market. It really got sold off. So,
Yeah.
you know, even plastic shoes couldn't hold up today.
No, and Crocs is really popular among Gen Zs. I'm no longer, I've never been a Gen Z, but you know, I like to hang out with Gen Zs, and it's really popular. They love the Crocs. It's
love the
really
Crocs.
fashionable. But
Yep, there you go.
it's definitely interesting. Let's go to next week and see if we got any major earnings coming up. We're almost winding down this earnings season. Again, this is our trading terminal, a tool we're building. We got PLTR on Monday. How lower
wow.
can this go?
How low can it go?
Disney on Wednesday.
Yeah.
And I think that's about it. We're kind of winding down
Yeah.
of majority of earnings.
We've got a few energy trades. We've got Suncor and
Suncor,
Oxy. Yeah. So, but like you said, we are kind of we're winding down. We're getting to the end of the earnings season. So, still a few to go, but a lot of the interesting ones have reported.
Yeah. Let me go to the week after and see if there's any notable one. Walmart, Home Depot.
Yeah, I got a few of the shopping ones. The retailers, TJ Maxx.
Yeah, and I think that's about it. And then going into the next week, really interesting. So the first start that we had from January to April was the third worst start of S&P 500. Did you see that stat?
Yeah.
That was nuts. That was pretty crazy as well.
Well, we've gone for an awful long time in this sort of quote bull market, you know, and so there's a lot of new traders that have never experienced, never seen a bear market like this, and you know, so it's you know, these are part of the market, you know, and like I said, there's a lot of people out there that have been trading this market and never seen a correction like this.
Yeah.
So I think it's a shock for a lot of people.
Yeah.
Stocks don't always go up.
Stonks. Don't always go.
Yeah.
It'll be really interesting to see that news with the TQQ, because they're really levered, and I wonder if you kind of stop people from trading it. How would that impact the integrity of financial markets? I don't know. I think people need to take risks for their own, but it's complicated. At the same time, you can see there's so much leverage in the system that a couple of percentage points.
I don't know if they'll prevent people. I think they'll probably put some rules in to say maybe you have to have you have to sign something, just like when you trade options, you have to sign something saying you understand the risk. Your broker is under more obligation to provide information. Maybe you have to have a certain amount of money in your account. I don't know how they manage that, but there is I don't think it didn't sound like they were going to ban them, but it did sound like they were going to sort of regulate them more so that people understand more the risks that are involved with them, just like options.
Exactly. Yeah, options can be really risky.
Yeah.
Every now and then I get people asking me questions. They're like, oh, I opened my account and I have like 200 shares of this company. I'm like, you sold something naked. And that's what happens. Yeah. It's really important to understand. Bitcoin not having a good day, down 10%.
No, again, just it's trading just like a risk asset, and when technology and high PE stocks get sold off, Bitcoin's, people keep making the argument that Bitcoin's so much more, and maybe it is someday, but at this point in the market cycle, it's trading with the rest of the market, basically.
Yeah, it's just a high beta Nasdaq, pretty much.
Yep.
Yeah, crazy. Brian, any last words, any last remark about the
Yeah,
market?
no, I think again, I just reiterate, just if we're in a different market than we were 1 year ago, just manage your risk, keep your position small if you want to be investing in this market and trading this market, and we'll get through this, and we'll look back at it and say, oh yeah, that was a bear market, and now we're back up, but it's who knows where the bottom is. Don't go out and throw, do a YOLO trade and throw your money in thinking this is the bottom.
Yeah.
Because market will maybe teach you a lesson.
100%. Trend is your friend. Risk management right now more than anything. Understand hedging. Be really careful, and you'll pass this. If anything, I think bear markets are even more fun. There's a lot more opportunities in terms of volatility. But yeah, this was an awesome season. It's been almost a year, this first season of After Hours with Traders. Can't wait for next season. If you have any suggestion how we should do things, different things you want us to really discuss, let us know. And we can absolutely do so. Probably in a couple of weeks, we're going to sit down with Andrew, come up with some ideas. But season 2 is going to be much more fun, much more intimate in terms of the setting. Maybe probably, as I said, sitting down, maybe playing poker or some kind of a game. And then we're just going to have a conversation. Really excited for that. Brian, as always, thank you so much. You've been a huge part of this.
Yeah, no, thank you. It's been a pleasure being part of this whole thing. It's been a great experience for everybody, and we're looking forward to the next season, basically. Awesome. Yeah. So thank you for hosting this. You've done a great job.
100%.
And thank you everybody out there for joining us. Appreciate you participating, or your likes and your comments. So thank you for that.
Yeah. So season 2, we're probably going to start with Brian's book. It's probably published by then. We'll have it. Maybe that will be our setting for the first episode of season 2.
There you go.
Well, thank you so much. Stay safe, trade green, and we'll see you in a couple of weeks.
All right.
Cheers.
Cheers, everybody.